Balancing risk and retirement goals is one of the most critical decisions you'll make for your financial future. But how do you strike that perfect balance? It's not just about the safest options, and it's definitely not about the highest returns. It's about finding tools that are tailored to your personal risk tolerance and long-term financial objectives. Today, I'm going to share the tools that can help you achieve just that, without the fluff or the typical sales pitches you've heard from others in the industry. And stick around, because there's one tool that you might not have considered, one that could change everything for you. Let's start with the basics. When it comes to balancing risk, it's all about diversification. For most people, a portfolio spread across multiple asset classes, stocks, bonds, real estate, and precious metals, offers the right level of stability while allowing growth potential. But what tools help you get this diversification without needing to constantly monitor the market? One tool I swear by is the Robo-Advisor. Companies like Betterment and Wealthfront use algorithms to assess your risk tolerance and automatically adjust your investment portfolio based on your long-term goals. These tools aren't just for beginners. They can be incredibly helpful even for seasoned investors who want a hands-off approach. Now, here's something that most people don't tell you. Robo-advisors also offer tax-efficient strategies, helping you avoid unnecessary capital gains taxes by strategically selling assets at a loss to offset gains. It's one of the best-kept secrets for retirement planning. But before you rush off to use these tools, there's a crucial point I need to make, and it's something that could dramatically change your retirement outlook. You'll want to stay tuned, because this is something that can impact both your risk and reward in ways that you haven't considered before. Next, let's talk about balancing risk and retirement with fixed income tools. Bonds are often considered the safer bet when the stock market is volatile. But the problem with bonds is that low interest rates over the years have really crimped their returns. This is where I want to introduce you to another powerful tool, the I-bond. These are government-issued bonds that are designed to protect your purchasing power against inflation. The best part? The interest rate is tied to inflation, meaning it can adjust if inflation rises. Unlike traditional bonds, these are a solid option for retirees who want to preserve their wealth without worrying about the value eroding over time. But here's something most people miss. The current inflation rate plays a huge role in your returns. And with inflation being unpredictable, you want tools that offer protection and adaptability. So, if you're focused on risk management, I-bonds can be a great hedge against inflation, and if you're really serious about safeguarding your retirement goals, you'll want to think about including them in your portfolio mix. Now, if you're aiming for growth with a bit more risk, it's time to consider gold IRAs. But here's where things get interesting. Unlike traditional IRAs, gold IRAs allow you to invest in physical gold, silver, or other precious metals. The risk here is that gold can be volatile, but it can also serve as a safe haven during economic uncertainty. If you're managing a large portfolio and need to hedge against market swings, this is a tool you can't afford to overlook. It can offer you that peace of mind, knowing your wealth is protected in physical assets that don't lose value overnight. So, why does this matter to you right now? Well, most tools out there focus either on maximizing returns or minimizing risk, but the best ones strike the balance between both. The Robo-Advisor gives you a low-maintenance approach to diversification, while I-bonds provide inflation protection and steady returns. And the gold IRA? It offers a unique opportunity to secure your wealth with an asset that has stood the test of time. But here's the kicker. If you rely solely on any one of these tools, you're not fully protected. Balancing risk and retirement goals requires a mix of these tools, plus one more thing that most retirement planners miss. I'm talking about a tool that helps you manage withdrawals in retirement without risking your longevity, something that allows you to take money out without compromising your growth. You probably haven't considered this tool yet, but it's critical, and I'm going to tell you about it in just a second. If you found this information helpful, subscribe. I'm here to bring you real, no-nonsense advice without the hidden affiliate commissions that so many other creators rely on. You'll get honest, value-packed content that's designed to help you make the best choices for your future, with no strings attached. Thanks for watching, and take control of your retirement goals with the right tools that balance risk.